Hello guys, welcome back. So Target and Walmart missed their earnings in the past couple of days and today. And Costco has been affected as a sympathy play because of these large retailers having been completely decimated. That's bound to happen with companies that are doing similar operations. And even though Costco hasn't actually reported yet, they are down 13% right now today. Now, if you take a look at what is going on with Costco today, you will see that they are down because of what has happened with Target, for example, here, which has beaten on the revenue estimate but had a large miss in terms of the target EPS because of high costs. And so you would potentially expect that for a company like Costco upcoming. And Costco is going to be having their financial results reported after the market closes on May 26th, so that's like next week. A lot of companies are actually reporting on around that week, really. So we'll see what's going to happen. But right now, you are seeing that the whole market is actually adjusting to the news, and Costco as well. You will see that Costco's PE ratio has been high, 34 here, and their price to free cash flow 35, dropping a little bit because of the recent decline really today. But their outstanding shares have been at about a similar level than what they had been last 5 years. Just a little bit of an increase, 1%. That's not massive, of course, not a big deal, even though that's an X here. It's probably okay. Total liabilities to free cash flow, a little bit extra here, 7.67 years to pay back our total liabilities using our free cash flow. Now, the 5-year revenue growth has been increasing along with the net income and the free cash flow. Nice to see. Total equity growth also increasing without much outstanding shares printing here. And the company doesn't have a lot of debt as well, which is something that I like to see when we're talking about this current market situation. And even with that little debt, they are doing pretty great in return on equity, 30% here. Very nice. And the dividend yield of 0.7%, which is about 27% of their free cash flow. Again, very, very healthy here. And if we take a look at the dividends module, you will see that the company's dividends have been a little bit all over the place because of their special dividends. Costco is a company that is well known for paying special dividends actually, so sharing back some of their profits to stockholders. And this is why you are seeing these bars over here. But overall, they have been increasing their regular dividend pretty nicely. It's still low. I mean, it's 0.9, which is about 0.8% for its dividend yield, and 0.76 if we're talking about the last 12 months. So it's a little bit low, but still healthy and regular. So let's go to our financial statements here and see what's going on with this company. From 129 billion to 196, been increasing very nicely here. Everything is green in terms of their increases. And the same thing with the net income, 2.6 to 5. Are we going to see a different story in this current report period when they're going to be losing some of their steam? We'll see about that. But their balance sheet has been pretty nice as well, from 11.08 billion to 18 billion here, a very, very important increase really in the last 5 years. And the cash flow statement, which is of course very, very important here, you will see that from 2.6 billion in net income to 5, this is what kind of operating activities cash flow they are getting, 8.9, almost 9 billion basically last year is what they did. Cash from investing activities, 3.5 billion is what they lost, and that's mainly because of capital expenditures really. And dividends paid here is what contributed to their financing activities pretty much, and that's pretty much the whole of it, and a little bit of common stock repurchase as well. And the company has about 11 billion in cash, and free cash flow that is increasing from 4.2 to 5.3, not tremendously, but still increasing, a little bit of a slump from last year. So let's take a look at our stock evaluation tool now. Try to discover what kind of price to pay for these companies. Looks expensive, but is it? Let's see. Now, the revenue growth has been better than the other retailers, remember, and it's been going very nicely every year. So I'm gonna go something like 5, 7, and 9 here. And the net income margins are also a little bit suppressed. I mean, this kind of discount retailers have very low margins for the most part. So we're gonna go 2, 2.2, 2.5. And the free cash flow margins, again, we're gonna go with something that makes sense, 80, 90, and 100. And 13% is going to be our annual return in order to buy this company and achieve some nice returns over the years. And if we hit calculate, let's see what we're getting here. Yeah, as I would kind of expect that the current price of the stock is sitting at $427, but our low estimates are at 116 with this kind of projections, and our high ones with this kind of projections are at 215. And our high ones, I think, are fair here, more than fair, if not a little bit aggressive, frankly. And so this price is elevated. I think I would hold off from buying CostCo right now, even though it has fallen a lot today. I still need to be getting it at a better price. It looks overvalued, so I think I will avoid it right now. And I'm kind of curious to see if we have any price targets about the company here. Yeah. Okay, so we have price targets of like 500, 600, 600 here, 500. Yeah, these are definitely a little bit elevated, but the implied moves are not massive. From at least when the price was posted at least right now the company stock is down a lot, so it would be pretty significant increases if they reach that high. But yeah, looks like people are mostly, as you see here, in the green. Implied moves are higher, so people expect it to grow apart from this one, I suppose. Interesting. So yeah, that's what I'm thinking about CostCo. A great company, of course, is a company that you definitely want to own if it's cheap. But based on what I'm seeing in the financials, it's not the right time to buy this company. Look how much it has been growing. And so it will probably have to be near these levels for me to buy this one. This is where it makes sense for me. So yeah, I'm avoiding this one from now. From all the three discount stores that I have examined right now, and that is Target, Walmart, and CostCo. Target was the one that I would buy if I had to buy one right now. Okay, and then probably Walmart, and then CostCo. So thank you for watching this one. I hope you enjoyed a discount stores day today. I have been making 3 videos already about them. All of them have been affected by the current market conditions. And thank you for watching again. And remember to like and subscribe if you enjoy this kind of content. And I'll see you in the very next video. Take a look at this video that I made as well about Target too. You may want to compare the two companies and see which one makes more sense for you. Thanks for watching. See you soon. Bye bye.